10:51. Oil is trading at 77.06. We've just entered a trade. One of the reasons why I've entered this trade here is because the indicator, the Woody CCI, is starting to move upwards. And this is where I start drawing a trend line showing that it is supporting this up move. The slow VSI is starting to turn upwards as well. I'm looking at the digits. And as long as that Woody CCI is staying above that trend line, I feel safe to keep the trade on. Usually I take profits with a small sized account like this, roughly anywhere between $70 to $120. This move, we had a little bit of a bigger up thrust, so I let the trade continue to go up. You'll notice that throughout the trades, I'm continually alternating through various time frames. All right, the reason why this is so important, each time frame will give you a better perspective of what's going on. Looking at the macro and the micro perspective, I always tell everybody who's starting out, look at the forest first and then work your way down to the tree. Okay, so prior to even entering these trades, I looked at the weekly, the daily, the 4 hour, 1 hour, down to the half hour, 15 and 5 minute. And when I trade, I follow a philosophy which is one market, one time frame. Meaning, this is all I do. I've tried trading NASDAQ futures, and that thing is a beast. It is a wild animal. I find crude oil more elegant. I would say more contained at times. Even in periods like this, when we're trying to, break above that that resistance, which could become a new support at 77.30, trading things like NASDAQ of some sort can be way more riskier. Okay, so we just entered a trade at 77.25. Again, the Woody CCI that I'm looking at, it is starting to turn upwards. And the slow VSI. I didn't like this trade in particular because of the momentum. And I drew a trend line on the Woody CCI showing that there could be resistance there. As you could see on the prior bar, it got rejected and price went down. So I took the trade off. All right. Remember, you're trading with a really small sized account. You cannot afford to second guess. If there's anything that is not going your way as you're entering the trade, you must remove it immediately. All right. There are certain times where you could let the trade run out, but you have to know where you're going to get out and what your maximum loss tolerance is. So we're up $150 US for the day. Many times when I put a trade on, I kind of just get up and, walk around, step away from the screen and come back in a few minutes just to sort of restart, refresh. All right. Keep in mind, I am trading this from a Microsoft Surface Tablet Pro. Very small screen. I'm in a coffee shop as well. So it goes to show you that, no, you don't need, 8 monitors to do something like this. And again, folks, I'm not promising you here that you're going to make millions of dollars or this is going to change your life completely. It's not. I'm advocating that this here is just another avenue of generating income. Don't be quitting your full-time job and saying you're going to be a full-time day trader or anything like that. That's stupid. Learn how to make multiple sources of income because the way things are looking out there with inflation, with geopolitical uncertainties or massive global layoffs, it's good just to secure yourself and know how to make money various ways. Yeah, trading oil. So, I mean, look at the daily chart. I'm scrolling through it, showing you what's going on, where we've have this trend of where there's a little bit of a bounce upwards and then a new low is made. Okay. We're now retesting that 77.30 level again. So we did another entry at 77.25. And one of the reasons why I've entered that trade is if you take a look at the Woody CCI, it's starting to point upwards. So that gives me some confidence that it's starting to go upwards again. And as soon as we cleared those candlesticks above the 77.30 level, it could take out some of those sellers and convert them into buyers, and up and away we go. All right. Here we go. Let's continue to see. Notice that the slow VSI, the figures are continually going upwards. Right now it's showing 62.70, 62.80. And what I just did there is I put a stop loss right below my entry in case there is a sudden pullback. With crude oil, it could be also very vicious and dangerous, where a massive liquidation can occur, meaning a bunch of people who are going to be stopped out. Let's say they're short at 77.40. They can't afford to lose to lose or have that that trade go further up, let's say to 77.60 or 80. So what they do is they just sell off all their positions, which could cause others to start selling off, and we have a pullback. Okay. All right, let me check what happened here. I think, I am trading from a coffee shop at that time. And when you're starting out, I don't advise you do this. Always have a stop as well. I think my internet cut out. I'm using a mobile hotspot. Always have two connections at all times. Whether you could do mobile tethering from your phone, or if you have a hotspot, make sure you have internet, the speeds are good, because if it cuts out like this and you're in a trade, you could be put in a really bad situation. All right, so we're inside 77.30. Looks like we're pushing up through. We are. Have the trade open. There we go. We took out that level, moving upwards, 77.40. Usually when that happens, when you're crossing above those candles, which were previous resistance, with crude oil, the way it tends to move up is it can move up pretty fast. Like it can get up to 77.60. So if you start looking at historical price moves, a lot of these moves where they take out these big key levels, the moves can go anywhere between 30 to 60 cents upwards. Okay, so as long as you have your stop loss below, sometimes you can let the trades run out, but my approach and philosophy too is set up your trades like a cheetah and take your profits like a sparrow. Take the profits. You could always re-enter. There's always another day where you could trade. You don't, have to hit home runs. Trust me, I've done that in the past. I learned from my mistake. Take your profits, go for a walk, do some push-ups in between, whatever. Get some fresh air, come back again and reevaluate the trade. All right, when you start having more money in your account, you have more capital, all right, then you can let some trades sort of run on longer. But for the time being, if you're trading with a minimum sized account, you must be careful. All right, take your profits, put your stop loss. Notice we're reaching the high of the day, close to it. So when you come to those certain key areas, keep in mind you could have a serious rejection where prices just sell off. So just be careful with that. I wouldn't necessarily buy and hold on to these price levels here. For some reason, I took the trade here, more particular because I was looking at the slow VSI. The number was moving upwards. But in these cases, I would be very, very careful. So price is moving up. You could see I put the little white line on the left on the chart that I'm anticipating that another move, once it clears 77.50, it could have a big move up to that area. Typically in crude oil, there's these psychological levels where they're, even numbers or ending in 50 cents, where once it crosses that, like you see, they had just had a big spike up. What did I do here? I put my stop loss, okay, down at 77.44. I'm going to let the trade run out over here. Notice I switched back to a 5-minute chart, and the Woody CCI is still pointing upwards. And the candles, they look great, all right? And another thing, too, is when trading days like this happen, notice that oil is currently down 5 cents for the day, 4 cents right now. When it turns positive, it could start bringing in a lot more buyers, and the moves upwards can become more explosive too. This happens primarily because there's more institutional type traders or algorithms that, when the crude oil is positive, they buy, or if it's negative, they sell. But notice how I switched to the daily candle chart. And if you take a look at that candle down there, I mean, what a recovery. All the way down from close to 76.25. Now we're up to 77.50. Okay, so we're up $320 for the day US. If you're trading in Canada, which I'm located in Toronto. The currency conversion, typically my daily target when I'm trading an account size like this, or if I'm recommending to anybody trading an account size like this, learn to have your profit targets between, I would say, anywhere between $150 to $350 US. I mean, if you're in Canada, that equates to $500 a day, right? So what I pulled up over here too is a time and sales sheet. Now, I mean, I don't rely on this too much, but I like to take a look and see if there's, if there's big buyers or sellers coming into play. Like if we see that it's getting rejected at 77.60, I take a quick glance at the time and sales. And if I see any big orders, like see buyers, somebody just bought 12 contracts at 77.53, it shows we have some support. But I'm also keeping mindful of any big sellers, which could have us pull back as well. All right. So we still have our stop, I believe, at 77.49. Crude oil is 5 cents away from turning positive, 6 cents right now. Our position is down. I took it off. So yeah, I took it off. I didn't like it. It looks like they might start selling it off. I didn't feel comfortable. And right now I'm kind of drawing these lines here to show and indicate the price levels that there seems like, for every 60 cents upwards, we have a pullback of 40 cents. And I'm anticipating a pullback as well over here. And just sitting and waiting. Looks like I'm going to re-enter again if we do take out that high of the day at 77.59. Keep in mind the slow VSI is, it is becoming in an overbought territory. I kind of zoomed out here so you could see the perspective too, where previously when we crossed that level, we had a bit of a sell-off. But for now, looking at the price ladder, the DOM, the depth of market, we are pushing higher and higher. Notice that on 77.63, there's 150 sellers, all right? So we look at that key number as well, both on the buy side, on the bid size, and on the ask size. So to me, a lot of people could view that as a resistance, like there's no way it's going to cross 77.63. But for me, it looks like it's liquidity because all those guys are going to get out of their position and start buying, and this could propel the price of the crude oil to go upwards. So be very careful here when you are at a price level like that. See how I hovered my mouse? Now we have over 200 sellers on the ask size. And once those guys get taken out, then you have a big influx of buyers coming in. And it looks like we're getting rejected. So my stop is down at 77.49. I've put it underneath that psychological level of 77.50, where what used to be resistance is now support. All right, here's another attempt to cross that 77.63. There we go. Took it out. Now we're going higher. And I took the trade off. All right. I took it off. Usually in big moves like that, where there are a bunch of sellers that get taken out, you have a lot of people taking their profits. And here's a snapshot, which I'm going to display later. It shows you there's been a total of 9 trades, 5 winning, 3 losers, 55% win rate. We're up $380 for the day. We started around 10 o'clock. I'm going to confirm that later, the total trade time. But yeah, that's it. That is the conclusion for today's trading day on July 25th, 2024. From my commentary, you could see what kind of things we look at. If you need help, if you're interested in learning how to trade crude oil futures, embarking on something like this will take a lot of time, effort. It's not easy. It's very complicated. There's a lot of bullshitters out there on YouTube who say, you could get a Lamborghini, all that type of stuff, or you could live off this. Some people, they can. I would say a majority cannot. It's very difficult. But being able to become a market participant and being on the sidelines, where you know how to use tools like this, where in an event where there's some geopolitical tensions occurring, or who knows, something with crude oil happens on the news, at least you're not just on the sidelines and just viewing what's happening. You can participate and make money doing something like this. All right, so if you need help, message me on itradeoil.com or my personal website, alexrajak.com. I work with a lot of people. We do one-on-one coaching. I do not sell any courses or packages. Why? I don't believe in that approach. This is ruthless. It is dangerous. It is very risky. You could make a lot of money, but you could sure as hell lose a lot of money too. All right. There's no such thing as a one size fits all. Everybody is different. I tell people you're not trading the market, you're trading yourself. You're trading your emotions, how you behave in situations where you're put under pressure, when you're dealing with fear and greed, which I believe trading can draw the best and worst out in that situation. It can really play with your mind if you don't know what you're doing, how to stay calm. People that I work and coach with, I teach them how to use deep breathing techniques to control their body to remain calm in situations like this, and also how to journal, meditate, and other approaches to trading for long-term success. Thank you for watching this video. Please stay tuned for another one, which is the July 26th. And I have a screen recording which I'm utilizing my webcam, and you could see just my body language and just my whole approach to trading as well, where I'm not phased if there is a loss that I take or if there's a big profit as well. I always try to stay calm, cool, and collective, and just make sure I'm not on the wrong side of the trade. All right, guys, thank you so much for watching this video. Stay tuned for the next one, and see you soon.